Welcome back. You're watching Indian Open. Let's see how the Asian markets are doing at this point in time. Well, we do have weakness in the Nikkei. That's down 1%, a little over that actually. And the Shanghai trending marginally in the green, whereas marginal losses for the Hang Seng. But the SGX Nifty for now is indicating a negative opening. It's down around 0.2%. And well, we're going to have to keep an eye on that one, but it's a new series, and as we move into the new one, what are the futures and options trends telling us? We have Navneet Saluja D'Souza joining us to give us an idea. Navneet, good morning.
Good morning to both of you. Well, looking at the highlights of the September series, we've snapped the 3 series losing streak in the month of September, and that's for the futures and options series. Let's look at the rollovers then, how they panned out. Nifty rollovers in absolute terms, that is in terms of open interest, actually appear to be on the lower side, but in terms of percentage, they're just at par with the average rollovers that we've seen for the last 3 series. And the FIs, well, they're starting once again on the short side. So the positioning once again is on the net short side, both on the index futures as well as the index options space. So let's get started and tell you how are the rollovers looking like. And this is actually the performance of the last 4 series. As I mentioned, we've snapped the last 3 losing streak series, and September Nifty gained about 5.7% and the Nifty Bank gained nearly 10% in trade. And also India Volatility Index was just about flattish for the September series. Looking at the rollovers, we're starting the series with open interest of about 1.55 crore versus 1.8 crore shares that we had seen in the August series. So in percentage term, it's just fine, though it's higher than August, but if you look at the average for last 3 months, it's at par. 1.8 was there in the August series, and in the July series it was 1.7, and that's telling you that the traders are taking the positions are very, very light going into the October series, despite of the positive news that has come in the last week or so. And Bank Nifty is the one where a lot of short covering was seen, and here also you're seeing 0.15 crore was the open interest at the start of the August series, and now we're starting the October series with only 0.09 crore shares there. In percentage terms, of course, it appears to be on the lower side. But importantly, if you look at the market-wide rollover, now this was the space where the advanced decline ratio was on the lower side for last 3 series. So that's improved. Also remember, starting today, there are 12 stocks which are out of the futures and options market. And looking at that, discounting that, this does appear to be on the higher side. Market-wide rollovers at about 94%. And finally, look at the sectoral rollovers where the positioning has taken place. And auto, where positions were on the short side in the last 3 series, finally that's bottomed out, and we are seeing positive rollovers for auto and auto angs. Private banks also, as we saw yesterday, were quite active in trade, and oil and gas, the oil marketing companies and ONGC, all these stocks have been quite active in trade. And looking at the negative rollovers, where the rollovers are appearing on the short side, it's PSU banks, metals, powers, as well as the IT pack, which finally came under pressure in this series after outperforming for last 3 series. And neutral rollovers have been seen for sectors like cement, consumer goods, as well as the pharma pack.
Okay, and how's the FI setup looking like at the start of the series, Navneet?
Well, they've entered the new series once again being on the short side. So this is on index futures positioning. 31% was in September. In October, they're starting with 34 and 69% positioning on the short side. So that's telling you maybe they've not covered all the short contracts that were seen. They have rolled over for the October series. And on the index options, of course, that's a weekly data, also dynamic exchange with weekly expiry. But still, they've bought more of puts and they have written more of call as well. And finally, if you were to ask me the range for this series, most of the technical and derivative analysts have been suggesting 11,200 will be the first support to be watched out, and on the higher side, resistance could come in at 11,800 to about 11,850. With that, it's back to you guys.
Right, Navneet, thanks very much for that. So that's what you've got into in terms of your setup as you step into the October series. Rusmik, Senior VP and Head of Fundamental Research at Kotak Securities, is joining us right now on the show. Rusmik, thanks very much for taking out the time. Obviously, fundamentals, while we're watching out for cues from there, but if you take a look at technicals and the derivatives market, and we were just highlighting, it doesn't look like FIs are really keen as yet. Even so, after getting all the possible, stimuli from the government, we're still entering short. They're still looking at, a slight negative bias towards the Indian equities. What's going on, and what would the stance be now?
Good morning, Devina. I think we are quite positive, thinking that FIs will come back in a big way. I think the last few days trading session, right from Friday till yesterday, we had expiry, and maybe a lot of the buying by FIs actually may not be visible in the cash segment, but it could be visible through the short coverings, which they've done, because they were quite short, maybe by way of hedging the portfolio, or probably they were quite negative on the market or so. So I think that phase is over with yesterday's expiry. Hopefully we'll see a decent recovery in the FII flows in this month, and probably going forward in the few months we're expecting huge flows coming back from the FII side. Two reasons. One is basically post budget, the FIIs had sold almost $4.8 billion of equities, and given that most of the negatives which are there in the budget have turned positive, we're expecting at least a bulk of that to come back into the markets. Two is maybe in the last 1-2 months, the stance taken by most of the central banks is towards easing, more liquidity coming into the system. We're expecting a lot of flows coming back into emerging markets, and now given this tax rate cut, India could stand out in the emerging markets.
Okay. Rusmik, I'll just have to come back to you on that note. Private lenders hope to increase visibility and grow their books at loan melas planned by the government. They'll join state-run peers at gatherings across 400 districts. Now, Mr. C.S. Ghosh, Managing Director and CEO at Bandhan Bank, he's joining us on the phone line to tell us what he expects from these melas. Mr. Ghosh, you were a part of that meeting with the Finance Minister, and it looks like a lot of positivity came out of that meeting. She spoke about liquidity not being a concern at all. She said that there was not one voice that raised any concerns with regards to liquidity, and now a push towards getting more loans out, 400 melas across 400 districts. How is that going to aid in terms of the festive demand pickup and the loans given out ahead of festive seasons?
Thank you. Very good discussion with the guest study. On the basis of that, he already mentioned some of the issues. And the loan mela objective is not giving the loan. Loan mela to offer to understand the people's demand. If it is a demand is there, so bank have their criteria to feed to lending to that customer, they will give out of that. So that is the discussion point is very clearly mentioned by our Honorable Finance Minister. So all the banks, the private banks, and the SFB, Small Finance Bank, and NBFC and HFC also was there. And they are all saying that they are already doing in this way on that, because if you see that the microcredit organization, or if you say that our bank, we are the weekly conducted that the 5 lakhs is a spot to collect our money and also disperse the money. And that spot we are always using on that who are the new people have the demand of the credit. We are providing that credit to them according to our criteria, whatever fit for that customer. So I feel that it is another initiative to matching to the customer who has demanded the loan, and who are lenders who are trying to reach them, and they can be easily reach on that. So in that way it is going, it will be very good help to credit growth.
She also pointed out that she expects, demand to pick up once credit starts moving into the system within 15 days of the festive season starting off. I mean, with all of these 400 districts and the melas that you're intending to have across the board, do you feel that will lead to an increase in the overall credit offtake, particularly to this segment, and by how much?
If you say that I am divided into two according to your question, one is our bank specific, another is an industry yesterday told that. If I say that the industry yesterday, so that they say that it is an as usual demand, whatever they have been seeing in the earlier year. So they have not seen anything in the liquidity crunch, and the demand is a shortfall. They are not finding out that. So they are also showing that they're very surprised how it is talking in that level. And in our case, if you say that the same, we are aligned on that. And if you see that we are every day lending to the 35,000 people with more than 250 crores. That means the monthly I am lending to 7 lakhs the people now. But the point is, they are always, every year, the financial year, the first quarter and second quarter, little bit coming the slow in our business point of view. I saw that. And before the puja, 1 month ago, it will be start, and accordingly it will be reached to the March. There is no change will come on that. It is only going to up. So what we've seen in that the September, in the next week is coming the puja. We see that our business point of view, that the September is as usual in the every other years. The credit growth demand is coming, and we are providing the credit to them. So in that sense, I feel that it is aligned in that the ground level people's demand and the small traders, their demand is as usual, and so that it is credit their contribution to the economy of the country. I hope that will be not any change on this.
Ghosh, good morning. The Reserve Bank of India has released a new liquidity framework, and there is a suggestion that there could be easier liquidity while going forward, but only if the financial conditions warrant. We really didn't know how much or what to make of these indications from the Reserve Bank of India. How are you reading into things? Because when it comes to the wider review of this approach towards liquidity, well, there are still a few clarifications that we require. How are you reading into the statements from the RBI?
Which point from RBI is an external benchmark, or what you are saying?
Okay, so Mr. Ghosh, I'll make it very simple. What do you make of the indications that there are easier liquidity conditions going forward, and how are you reading into this aspect?
No, if you see that the yesterday discussion point, everyone saying that the banks are lending to them who are the NBFC and HFC. They are not feeling anything in the shortfall from the lender's point of view. So in that sense, I feel that there is if you see that the deposit point of view, whatever the bank are getting their liquidity, it is good enough on that, so that the rate is coming down.
I think, what my colleague also wanted to say was they actually did not accept the argument that the liquidity stance should move in tandem with the monetary stance. So in light of that, probably there is a little bit of a disconnect out there. So, if you have a...
I'll drop on that.
All right.
No comments. Next.
Okay. All right. Mr. Ghosh, thank you so very much for joining us this morning. It was a real pleasure chatting with you. So, according to Bandhan Bank, they are still doing what they've been doing. They have a very wide reach in terms of, giving out those loans. Almost 7 lakh customers is what they target almost on a monthly basis. They've got the festive season in September, the puja season starting, and they're on track with the credit offtake, at least on the retail level. But Rusmik, come back to this on the banking space, and we've been talking about liquidity and whether or not there's enough of it, but it looks like there's enough of liquidity in the system.
Devin, you're right. In fact, RBI has been very proactive since last couple of months, trying to address this issue of liquidity. So they've taken series of measures, and going forward also, I think if expecting some more rate cuts and some more measures from the government and the RBI, it's a more concerted effort now, unlike what we were seeing 3 months back. So now both the government and RBI both are actually trying to see that there is no problem of liquidity in the system, especially during the festival season. And what we are seeing is most of the larger NBFCs, they are also talking very positive. For example, Hemen Financial recently said, as compared to the earlier projection of 3% growth, they're talking now of 10 to 12% or between 10 to 15% growth going forward because of better Rabi cultivation likely, and better income in the hands of rural side also post the Rabi cultivation. So I think the super rainfall this year, 6% above normal after almost 6 years gap, could be a big boon and a savior for the rural economy going forward. It could also help a good kharif cultivation going forward next year also. So I think the pain points probably could be there for the next 2-3 months, and whatever RBI takes, it takes a lag effect of at least 3 to 6 months for those measures to be visible and take effect on the ground. So I think yes, the loan melas also a good initiative. especially before the festival season. It could give a little perk up to the slack seen in the demand side. So we will have to actually just wait out and see. It's because we are very short now. The festival season almost come, and not very sure, to what extent is going to help revive the demand at a very short notice. But yeah, I think long-term trajectory, maybe 2-3 months down the line, I think we should see all these measures taken by the RBI and by the government, taking effect and reflecting in on the ground in terms of improved demand situation going forward.
Okay, Rusmik, hold that thought. Let's also take a look at all the stocks that are going to be in focus, and there are plenty. Of course, there'll be stocks and news as well. Well, brokerage calls for today for one of the important banks, of course, will also be in focus. We have a research team who's joining us. Good morning, guys. Nikhil, as usual, let's start with you. What do you have in stocks and news?
A couple of them actually. Phoenix Mills first, where the promoter is looking to sell around 2.5% stake in the company with an upside option of selling it to an extent of 3.6%. The floor price has been set at 665 per share for the secondary placement. Now this floor price is at a discount of around 8.5% to 9% from the previous market price that we saw yesterday. And then we're expecting Indian IT stocks to be in focus. Accenture results have come out and they have been in line with what the street was estimating. In terms of the guided constant currency revenue growth, it's to an extent of 5 to 8% for the financial year 2020. The commentary has also indicated about the strong demand environment and the pipeline. Along with that, there have been a new booking growth, which is also which has been strongest in the past few quarters. Also, we'd be looking at Tata Motors, where JLR plans to close its UK factory for a week in November. This is mainly on account to protect or downside any kind of disruption that the plant could potentially see from a possible no-deal Brexit. Also looking in the list, Lakshmi Vilas Bank, where Economic Offences Wing has registered an FIR against the Board of Directors on complaint by Religare Finvest. The bank is now looking to consider appropriate measure to counter the FIR, which has been fined by Religare. Bulk deals, two of them that we're looking at, ICICI Lombard, where LA Gifford has acquired a 0.7% stake in the counter. Along with that, we have SBI Mutual Fund, which has bought an 1.76% stake in the counter. On the selling side, we have FAL Corporation, which has offloaded close to 5% stake. And last on the list, we have Escorts India, where Saudi Arabian Monetary Agency has already sold more than 0.5% equity in the counter.
Okay, thanks, Nikki. Well, we're going to talk about a few brokerage bets today, but let's start off with the big one. UBS on Yes Bank. Shefali, well, something rather unexpected lines considering it is UBS on Yes Bank.
Well, yes. So what basically they're saying is that there have been a couple of downgrades. I've also been talking about it, that, all these downgrades and these, mid-cap accounts that we've been talking about, Cox and Kings or CG Power, etc., all these are going to reflect in the books of banks. So that's what UBS is also saying, that the spate of downgrades in the last couple of months has increased quite considerably. So they are estimating about 4.4% of loans that Yes Bank has given have been downgraded to non-investment grade. And in addition to that, about 3% of loans have been downgraded to B1 category. So all these will be a concerning point for Yes Bank, and according to them, the market, whatever the market is anticipating with regards to the asset quality of Yes Bank, according to them, there's going to be a further downside to that. And according to them, NPAs can rise to about 7.6%. They reported something like 5% at the end of June quarter. So from that level, it can go up to 7.6% in FY20 and 9.4% in FY21. So those are the estimates being given by them. So we've seen EPS upgrades for most of the banks after the corporate tax cut, but for Yes Bank, there's actually an EPS cut for FY20 and 21 by 63% and 15%. So but the important thing is that in their estimates, they're not building in further capital raise, which the bank has been trying to get. So they're maintaining a sell rating, and have cut the target price to about 45 rupees a piece.
Right, thanks, Shefali. But what else is in brokerage focus today, Sumit?
Well, firstly, Maruti Suzuki, where Morgan Stanley has maintained their overweight rating on the stock and has hiked the target price to 8,205 from 7,181. According to the brokerage, the passenger vehicle volumes in July and August were lower than that of 2018, and it looks to be at a trough and should turn from FY21 due to tax rate cut and the falling interest rate scenario. Along with this, the brokerage also believes that the return of operating leverage would aid Maruti's margins going forward, and also Also, improving capacity utilization at new plants should aid the margins for Maruti Suzuki. Now, the brokerage has hiked the target price for Maruti as it has raised the valuation multiple because it believes that Maruti is best placed from this expected upcycle that the brokerage is expecting. The second one is on Indian Telecom, where Credit Suisse has assumed coverage, and the brokerage says that the mobile pricing is unsustainable and is unlikely to change going forward. Now, Credit Suisse says that the mobile pricing is unlikely to improve meaningfully over the next 18 months, but the stock price is currently factoring in more than 30% improvement in the average revenue per user for Vodafone Idea and Bharti Airtel FY22. Now, for Vodafone Idea, it believes that they will still need more equity capital infusion in the company to sustain, and for Bharti Airtel, they're expecting the market share to remain largely stable. On Jio's entry to fixed broadband market, it is expecting that the market will expand going forward because of Jio coming in. Now, for Bharti Airtel, they have assumed the neutral rating, but have hiked the target price to 370. For Vodafone Idea, they have assumed the underperform rating and have cut the target price to 4.5 rupees per share. And for Bharti Infratel, they have assumed the outperform rating with a target price of 330 rupees per share.
Right, thanks Samit for getting us those details. But on that note, let's get in our technical experts for today. We have Brijesh, Bhatia and Hemen Kapadia joining us on the show. Good morning to both of you. Hemen, let's start with you. How are you expecting indices to move from here on?
A very good morning to you, Agam. Thank you for having me. I think like Navneet mentioned, we've got not a very good rollover. I think the Bank Nifty, we're starting very, very light. So one, I don't think the markets looks like running away based on the rollover at least. I believe a small period of consolidation. Yeah, it could move a bit, test the recent highs, but I believe there's a bout of consolidation down the corner and that should do well for the market. So I would be slightly positive, but not run away positive. The gap that we saw has been partially covered, not fully. So I believe that the gap covering could happen sometime next week. So I would be optimistic but cautious looking at how the rollovers are panned out.
All right. Brijesh, what is your strategy going to be at the start of the new series?
I think if you look at the sector, I was just looking at the sector yesterday, and if I just look at the start of the end of the August series, when a major sector were in the bullish territory, and if I just look at the 19th sector, out of that we were around 10 in the bearish momentum and around 6 in the bullish momentum. So the scenario has now changed, and if I just look at the structural, we are into now 3 bearish and around 11 bullish. With around rest of the neutral. So I think yes, bullish momentum is clearly seen, and most importantly, if you look at the recent rally, the underdogs which were mostly underperforming has seen a biggest short covering rallies in future, or maybe if you look at the cash stocks, even we have seen a lower level strong buying coming on in the mid caps and small caps too. So I think this momentum might slightly continue in the October series as well. So 11,500 as of now stands out to be a good support at the start of the series. So I would suggest to go long on spot in case we dip to around 11,525, 7,540, and look for a momentum-based target of 11,760, 770 on the upside, and keeping a stop loss of 11,410. So I think October series we might see again a bullish momentum and probably a range of around 11,358 on the downside, and up we think around 11,858, 60 could be the big resistance zone for October series. In case you find around 11,800, a good profit booking could be expected around those levels on Nifty.
All right, Brijesh, what stocks are you tracking today?
I would suggest 3 longs. Purely, I think the Midcap would now again a big upside momentum could be seen. And let's start with the Voltas first. So we have seen a stock consolidating for nearly 2 years in a rectangle formation, and we have seen stock breaking out of the rectangle formation with a bigger volume tick. And the retest also been done and at around 660 marks. So ended yesterday the series ended around 678. One can take a long bet at 678, keeping a target of 738 on the short term. And probably I think 1.5 to 2 months stock can around test around 800 levels. The momentum stop loss would be around 660 on this stock. Second is Britannia. We have seen FMCG stock being again gaining good momentum, and Britannia is no left in the recent rally. So at around 3,000, around 6,092, one can take a long bet, keeping a target of around 30 to 50 to 33.40 on the upside, and stop loss can be placed at 3019. And the third stock would be a momentum-based stock on JM Financials. So yesterday we have seen a good upside momentum back, stock trading about 200 days average, breaking out of its pennant formation on the short-term charts. So at around 84, take a long bet for the target of around 90, 93 on the upside, and stop loss could be placed at around 81 on the stock.
Okay. Hemen, what about your stock ideas?
Yes, I like a couple of stocks, Devina. Firstly, LIC Housing Finance. It's a contract call. We've been off for 4 days in a row. Rock solid support at 390. Oversold on the intraday charts. Just a hint of positive divergence and crossover buys coming in on the intraday lower time frames, Devina. So buy LIC Housing Finance at 392. Stop loss 389. Target 398. Secondly, I have a buy call on Sun Pharma. Once again, it's a contra call, support levels, positive divergences on the hourly, 2 hourly charts. A bounce is in the offing. So a buy in Sun Pharma at 410, stop loss 406, and a target of 418.
Okay, those are some stock ideas coming in from Hemen as well as Brijesh. Keep them in mind. We've got about a minute left to go for market pre-open. All eyes are going to be out on what the index does this morning. Remember, the SGX Nifty is already suggesting a slightly slower start for the index. So 11,600 odd is what the SGX is currently trading at. It is the new series, the start of the new series, and Bank Nifty at about 30,000 in yesterday's session. There was probably a sentimental level to watch out for. We sustained that, went above it. For the series as well, it was a 10% bump up. It's going to be important and crucial to see what happens there. And Yes Bank is one important index stock that we need to keep a track of. Nestle steps into the index today, so that's the other one that you need to keep an eye out on. Indiabulls Housing Finance out of the index today. Nestle moves in, and remember, we've been talking a whole lot about how this particular stock, despite its heady valuations, has outperformed all the rest in the similar space. Even an HUL on a yearly basis, Nestle has given an outperformance of 10 to 12% versus even the favorite HUL that most analysts recommend. 4 seconds left to go for market pre-open. On the index, we've got the Nifty at about 11,556 at first stick. The markets have opened softer, but it's a mixed bag actually. Sensex has opened 0.25% higher, but again, very volatile moves on the index, starting off with individual stocks. Yes Bank, obviously that one's a big cut of about 10 odd percent. We'll see if this is what sticks to it or it somewhat comes off. Ultratech Cement is down about 2.5%. M&M is down 2%. You've got ONGC down about 4 odd percent. Ultratech, BPCL, Tech Mahindra, HUL are all trading with cuts in today's pre-open session. ICICI Bank too is looking weak right now. Then you've got Bharti Airtel, Bajaj Auto, that too trades under. Amongst the gainers, you've got Indian Oil, Hero MotoCorp, NTC, Dr. Reddy's. Titan has gains of about 0.25%, and then Grasim is up about 0.6%. Reliance Industries, that is also up in the session marginally though. Coming to the currency, 70.88 was the close in yesterday's session. It's opened slightly weaker. 70.91, 70.92 is where it's currently trading at. But what's happening in the broader markets?
I'm going to pull up Phoenix Mills because we do know that the promoters will look to offload about 2.5% stake, and it could be more. It could go up to around 3.6%. So Phoenix Mills is in focus. We have strength in Parag Milk Foods, which has been under pressure of late, and that's looking like it may start off well in today's day of trade. There is strength in Tech Solutions as well. Along with something like a Hexaware, we're tracking gains in both these mid-cap IT companies. So keep an eye on that one. Edelweiss is something which has been under pressure yesterday. In fact, it did see a very sharp drop yesterday. Can we expect a recovery today? That's a wait and watch too. So we'll be watching out for these names, and of course a handful of other counters, which include something like a Delta Corp was at 195, 196. Well, looking at an uptick of around 1%. Not too much to speak for otherwise when it comes to losers, but let's pull up see it, because that is looking like it's going to open with a 2% cut. And Mindtree similarly, and contrary to its other mid-cap peers, is likely to open in the red for now, but that's what we have, fairly evenly poised open as far as broader markets are concerned, or should I say pre-open.
I think Nestle also positive this morning as it enters into the index. Margin, muted performance, not too much, just 0.1% or so. But coming back to our guests, and what would you do now with the likes of Nestle or an HUL? Rusmik, this question is for you. We've been talking about how expensive and heady the valuations for all of these consumption names have been, and they've just got more expensive after this recent rally that we've seen. However, the tilt and the favorite still remains HUL compared to a Nestle, even though Nestle has outperformed HUL in the last 1 year.
I think most of the FMCG companies, were trading very expensive and rich. Thankfully, because of this steep rate cut, most of the companies have been full tax-paying companies, and to that extent, they get the benefit of a one-time reset of around 15 to 18% in the stock prices, because that's the gain they make in terms of savings in the form of tax. So that adjustment, I think most of the FMCG companies have moved up between 15 to 18% in the last few days. So our feel is that again, they go back to the same expensive, rich valuation zone. We would like to stay away and let them correct a little bit, because if we look at the revenue growth of the top 12, 13 basket of 12, 13 FMCG companies, they used to grow at 10, 12% in FY 18, 19, and that growth has come down to 5% in the last quarter, the June quarter. So from a revenue growth perspective, I think still they will be growing in mid single digits, especially in the coming this quarter, and probably gradually they'll pull up, and the growth could come back from March quarter onwards. So given this slack demand, rich valuation, we'll still stay away from some of the names. Lever and Nestle, we still have price targets which are way below the current market price. Yes, if for some reason if they correct by around 10%, then one can look at most of the rich valued FMCG companies.
Rusmik, I wanted to get your view on Yes Bank. For all who are stuck in this particular bank, are you suggesting that they stay put or actually will sell, considering the concerns around this bank? If you go back, we have been quite negative on the bank since the price was 300 rupees, and still we remain negative only. It's gone to a vicious circle now. And the stock is trading almost now at 40-50% lower than the book value also. So what happens, actually it's a chicken and egg story. You need funds to revive the bank. You need to do a lot of QIP, raise money, but again, if you're raising money at 40% below the book value, it kills the ROE further. And anyways, when we had talks of bank raising money at 80-90 rupees also, maybe we haven't heard big marquee names coming in a big way and pumping huge amount of money. So somewhere the deterioration in the asset quality and headwinds of more NPAs getting booked is a serious concern. And on a broader basis, I think so what is happening is we've seen cut in earnings of most of the other banks also. So because of there could be a reduction in the earnings because of deferred tax assets also. Most of the banks are carrying who have booked a lot of NPAs and have some more to be done. So I think given all the concerns and headwinds, we still remain negative on the bank, because what's going to come and hit, we don't know. A lot of uncertainties and a lot of it's a black box still as far as NPAs are concerned. We would still stay away, because there are enough good opportunities available in the market in the private sector space, which are growing the retail book at more than 20%. In fact, we're expecting the retail book to grow at a much more healthier pace, given the constraint that NBFCs have today in terms of lending. So I think our viewers will still stay away from Yes Bank. And even if investors have to book a loss, it makes sense to book a loss, because you don't know the downside of the stock, because in previous such incidences, we have seen erosion to the extent of 80-90% also in a lot of the stocks.
Okay. A quick word from you, Brijesh, on two stocks, HDFC, AMC and Bata, if you track it. Both have been outperformers.
I think HDFC rally might continue till around 3350, 3400, where I see some things coming on these stocks, because generally, if I just look at the rally, it 261%, ends around 331.48. So probably that would be levels I would suggest in case clients are holding long, can book those profits around. In case before that it dips to around 27.80, 27.50 zone, can again take a fresh momentum long, keeping a stop loss of around 26.70 and look for 3300, 3400 on the upside. Coming on the Bata, yes, still on the very upside trend trajectory. And if I look at the momentum, it is again after it has generally a tendency of rallying, a strong rally for a couple of days, then a consolidation of around 6 to 7 trading sessions. So I think more couple of days there could be a consolidation, then again a fresh momentum carrying on towards 1830 levels on the upside. So in case it dips around 1669 to 1678 zone, take a fresh long position. 1645 would be the stop loss for the recent momentum, and 1830 would be the upside targets one can look on Bata.
Okay, there was a very interesting move on Godrej Properties as well, specifically in the last half an hour. And there was a very sharp up move in Godrej Properties. In fact, at one point in time, it was trending about 1100. So I reckon, if I'm not mistaken, this was near life highs, if not at life highs. But it's at 1094 currently. Hemen, how would you address Godrej Properties? How would you go about it?
Well, everything looks in fine fettle. Only thing is, like you mentioned, we've come close to its all-time high of 1119.60 somewhere in early July. I believe we would face some amount of resistance over here. Now, we remain in a longer-term uptrend though. So if we take out this level, I guess a further upside seemed like a distinct possibility. But if the stock has moved from 890 to 1110 in 5 trading sessions, I'd wait to see how it handles this 1119 level. Expect a small consolidation, look for a dip, and then look at it favorably. Or the worst come scenario, it just knocks off the earlier level and goes up. But I would be more prudent. I'd wait for a small cool off and then look at it.
Okay. Stay on with us, gentlemen. We are minutes away from market opening, and we tell you all that you need to know to stay ahead and trade today. Yes Bank promoter entity Yes Capital sells 1.8% stake in the bank for 241 crore rupees. Promoter stake in Yes Bank now falls to 13.4% post the sale.
And promoters of Phoenix Mills look to sell 2.5% stake with an upside option to sell up to 3.6% in the company. Floor price for the sale is set at 665 rupees a share, according to a Bloomberg report.
Tata Motors in focus as Jaguar Land Rover plans to close its UK factories for a week in November, move to guard against disruption from a possible no-deal Brexit.
And the Economic Offences Wing has registered an FIR against Lakshmi Vilas Bank on a complaint by Religare Finvest.
All right, Indian IT in focus after Accenture guides for constant currency revenue growth of 5 to 8% for fiscal 2020. Company's commentary indicated a strong demand environment and deal pipeline.
And lastly, Credit Suisse observes that Indian telecom mobile pricing is unsustainable and it is unlikely to change or improve meaningfully over the next 18 months.
Okay, that's what we've got, and watch out for all of those names as we step into trade this morning. But I want to quickly get your view, Rusmik. If you track any of these private sector banks, Federal Bank, DCB, IDFC First Bank, and whether or not they make a good investment opportunity right now?
Yes, indeed, we track most of the private sector banks, and the prominent way we are very bullish is Federal Bank. Loan book growth of 25% in the retail space, and revenue growth, net profit growth of 45% last quarter. CASA ratio is pretty healthy. You'll see 15 to 16% loan growth going forward also. Stock trading at just 1.15 times price to book. ROEs of around 15% going forward. They could have, the management is guided for return on assets of more than 1% and around 1.2% in FY21. So all the metrics, if we take on, most of the Karur Vysya Bank, Federal Bank, DCB Bank, all are looking good from a fundamental perspective. All are trading at close to the lower end of the valuation band, and business actually will be better for them. Similar to what we're seeing for the larger banks like Axis Bank, ICICI Bank, and IndusInd Bank. The larger old private sector banks also will be in good shape in terms of business, because most of the NBFCs are not able to cater to the demand because of their liquidity issues and their asset liability mismatch somewhere. They need to correct that. So they are out of the market. It's a good opportunity for these banks, both old and new private sector banks, to grab more market share. And given this recent events where cooperative banks also are under stress and focus, the more it is good for the structured old private sector banks to get more deposits and be in a position to lend in a healthy way. And most of them, we are noticing in the last couple of quarters, have shifted more focus to retail and less on the corporate side. And most of them have already gone through the pain also of NPAs to a large extent.
All right, sure. Well, let's also quickly take a look at something like a Titan company, because that's the other one which has been focusing a lot of strength. A large cap stock at around 1291, if I'm not mistaken. Again, it's high. Its lifetime highs at around 1345. Brijesh, can I take your view on Titan and how you expect this one to move? A possibility of it taking out its life high, which is not too far away from current market levels?
I think I would rate for around 1310 to take on, because if we have seen again 1300 being resisting the expiry zone, and majorly if you look at the previous highs, similar highs were there, and I would slightly wait for around 1310 to take on out to take a momentum again on the upside. Otherwise, stock might again take a dip to around 1240, 1245 on the downside.
Right, guys, 15 seconds left. I'm going to quickly take your stock calls for today. So, Hemen, your top pick for today?
Yeah, my top pick would be a buy on LIC Housing Finance and a buy on Sun Pharma.
Brijesh, same question to you.
Yeah, apart from three stock, I think KRChoksey Construction opening around 234 can take a long bet for target of 240, 243 on the upside, keeping a stop loss of 229.
All right, Rusmik, we'll let you go on that note. Thank you very much for joining us. Hemen, as well as Brijesh, please stay on. We'll get your opening thoughts once the markets open up for trade this morning. We're about 10 seconds away. Pre-open suggesting that we are going to probably open with a slight negative bias. The Nifty is down about 0.1% in pre-open, and that's what you've got in terms of your market opening. So just about flat, slight negative bias, about 0.2% cut on the Nifty 50. 11,545 is what you've got at the start of the day. Sensex also opens lower by 0.25%, and then the Nifty Bank closer to 0.33%, sub 30,000 in today's session. Coming to the broader market space in the mid caps and the small caps, mid cap index is also flat, nothing much to talk there. Small cap index marginally, it's flat with a very slight negative bias, and the rest of the day how it pans out. But individual stocks and what you need to watch out for as we set up for trade this morning in terms of the gainers as well as the losers. We'll start off first with Yes Bank. That's going to be the big loser of the day today. As you've got to the promoter and promoters selling more stake. Yes Capital yesterday sold out 1.82% stake. Stocks open lower by about 4%. Other than that, some of the private sector banks, we'll take a look at Kotak Bank, IndianOpen Bank, Axis Bank, ICICI Bank, and how they've opened up in trade today. In tandem with what the Bank Nifty has done, all of these stocks looking slightly weak this morning. Kotak Bank is down about 0.5% or so. Oil marketing companies and the likes of ONGC and Reliance in the oil and gas space, just to keep in mind the last few days, oil marketing companies have done really well. And yesterday's Goldman Sachs note, that upgrade that came in on oil marketing companies, really spurred some interest in some of these names. Reliance Industries is open weak, about 1% lower for Reliance Industries. BPCL and IOC will come up next. And then we take a look at the new entrant into the Nifty, that is Nestle, and how it is actually done at the first day on the index. So it's open lower, 2% and probably the jinx of the index kicking in from day one. 13,600 on Nestle. But HUL is the other one. You'd probably look at that, all of those consumption names in tandem. Britannia, ITC on the index, and see how these stocks have opened up for trade as well. That's Britannia down about 0.5%. The color seems to be more red than green this morning. ITC is up about 0.5% or so. But other stocks to focus on from the broader market space and some stocks that are making news this morning. We'll start off first, obviously, with Phoenix Mills. The promoters looking to sell stake in the company. The stock's down about 3.5% in the session. Aside from that, remember there have been a whole lot of buzzing stocks. ICICI Lombard also, we've seen Fairfax selling out some stake, but there's not much of an impact. I think yesterday you saw a reaction to that as well, about 1.25% higher this morning. HPCL, yesterday big mover, and Lakshmi Vilas Bank, obviously on the back of that FIR, that stock is down about 5%, and that's reflecting what the pre-open ticks was suggesting of Lakshmi Vilas Bank. Other stocks that made big moves, all cargo logistics carries on. Gati is the other one, HPCL is the other one. So all of these stocks, all cargo logistics, Bloomberg News suggesting that they're looking to pick up stake in Gati, and the stock has been active ever since. We've got Gati also, which is up about 1%. And finally, Godrej Properties, after that big 8% pop yesterday, in today's session, cools off a bit, about 0.5% lower. But what else are we spotting, Agam, in the broader markets?
Well, we do have a lot of activity in Indian networks because that stock is advancing by as much as a little over 3% for now. We have gains in Sundaram Clayton. That is also up nearly 3%. These are the top, handful of gainers as far as the NSE 500 is concerned, besides the fact that we have gains in all cargo logistics. SH is up and about, that's advancing by around 2.5%. We have Indiabuzz Integrated, one of the most volatile counters in the mid-cap space, arguably, and of course we've seen that gain as well in today's day of trade. Well, two companies from the same sector, Quest Corp is up and about, it's advancing by 2%, and Team Lease as well is also seeing some amount of strength in today's day of trade. So that's as far as your gainers are concerned. Very quickly to take a look at the losers. Coffee Day Enterprises, well, one of your usual suspects to decline, but Lakshmi Vilas Bank is also in focus considering that FIR we spoke about, and that's down around 5%. Engineers India is also in a bit of pressure, as is Birlasoft, both of these losing out around 2.5%.
All right, Ratnesh Kumar, MD and CEO at Bob Capital Markets, is joining us right now on the show. Ratnesh, thanks very much for taking out the time. The mood of the market is optimistic, but obviously you are going to see near-term gyrations in terms of some amount of profit taking after that big bang move that we saw last week. But has the overall sentiment changed according to you, and is it is the time ripe to start making those big ticket investments?
Certainly, the sentiment in the market has quite significantly changed after seeing very decisive actions from the government about a week back. So naturally, I think various steps were coming in earlier as well. But the move on tax, it has substantially changed the sentiment for sure, and that is reflected in the market. But naturally, the market will look to consolidate the gains, as well as look at also the fundamental factors on the ground, because naturally, the tax policy impact, some of that will be felt over the long term. So which is of course will be great if it can revive the investment sentiment or the capital investment downturn which is there, but the market will also focus on what comes ahead in terms of the earnings season and those kind of variables.
So do you think that while obviously this gives you that bit of additional cash on the balance sheet for most companies, profitability numbers will look good enough, but the growth that will spur the top line will still take some more time?
Yes. So first and foremost, I think there was a negative mood, within the market or in the corporate sector earlier. So it was important to sort of change the sentiment and change it, in a decisive sort of a way, which is what the government has done. I think. Now going forward, what it is that naturally some of these tax changes, they will have a more longer term impact in terms of derivative benefits, be it more cash on the balance sheet and what that makes companies do, etc. But change of sentiment itself is significant, and what we have to now watch for is how the months ahead, especially the festival season, if that brings demand back on the normal trajectory. All of that will be watched by the market as well.
Okay, Ratnesh, hold that thought. We understand microfinancers too wish to participate in loan melas across 400 districts of the country. And we have Sanjay Agarwal of EU Small Finance, who is among the several bankers who met the Finance Minister Nirmala Sitharaman last evening. Let's speak to him and get a little more perspective on this aspect. Sanjay, good morning and thanks for taking the time out. Your quick comments, what were the highlights among the conversations that you did have with the Finance Minister?
Yeah, I think it was a super meeting. For me, I actually met first time any finance minister of the country. So I think there was a very clear evidence that, the government intent is very clear that, they want to solve this issue. There is a speed, there is urgency. And I think with that group of people sitting there, there was enough confidence among us that there is no liquidity crisis around the money, so there's a lot of money available with bankers, the good NBFCs. And of course, there is some kind of cyclic issues around auto loans, Barring that, of course, we all know about real estate position. Barring that, two things, I don't think that there is much challenge around the asset quality or a disbursement or asset growth. And there will be some cyclic issues which will get resolved in the next 2 quarters. And I think everything should be okay.
Okay, Sanjay, but any challenges in the near term that the sector may face, specifically the sector in which you operate, and possible remedies suggested?
So, no, I think honestly, as far as AU is concerned, we are not having any issue around our asset quality or disbursement, growth, market, geography. So, everything has been done, and I would appreciate the way the government is dealing now. So they are so proactive from last 2 months that, everything is getting resolved in terms of operation. So my only submission to the FM was this, can the regulator and the government and the lenders can have some joint meetings so that any small issues which have a larger impact sometime can be resolved, on a very proactive basis. And I was so good to see that, ma'am agreed for that. And, in future to come, she will organize some kind of more meetings with us to resolve any issues which has a larger impact.
All right. All right. Sanjay, it was great talking to you. Thank you very much. Quick comments there coming in from AU Small Finance Bank. Ratnesh, I want to go back to the comments that we just heard with regards to the meeting that most of these private lenders along with NBFCs had with the finance minister yesterday, and the positive takeaways from that push towards making sure that credit offtake happens in a meaningful way before festive season. And what's your take on this entire space?
So yes, I think all the steps which are being taken, I think it is definitely positive. The interaction with various stakeholders is also, it gives confidence to the market. So naturally, as we go into the festive season, firstly you will get data points from September from autos and other sectors. Those are not going to look good, but I think market will look beyond that and look forward to how it shapes up in October, how the rate cuts, how much impact they can have, and the additional liquidity which is being talked about, how that improves the financing environment in the festival season. And so yes, I think the decisive policy action what we've seen, what that has done, is that it is enabling the market to look slightly ahead and not just look at what happened in September month, etc., which is a positive thing.
An interesting point to make, because we just did an auto dealer survey which looks at what dealers are talking about in terms of how the festive demand is going to be. And obviously last September, because of the base effect, you're not going to see a month-on-month expansion. It will still be a dip, but initial feelers are that it's going positive. The start of the season has not been bad. In light of that, autos, do you feel could see a change in overall sentiment in terms of the stocks at least?
So I think specifically in terms of auto stocks, I would think that it would still take a little while longer for the business to come back to regular trajectory. So yes, if there is improvement as you suggest in the festival season, as dealers are saying, that will be an excellent thing. But there has been a sharp dip, and financing, especially what the NBFCs were doing in the auto space, that vacuum needs to be filled up. So I think it would be probably another 3-4 months at least before the business comes back on the normal trajectory, and I would still wait before trying to go bottom fishing in the auto space.
Right, Ratnesh, so how are you going about recommending making changes in portfolios, if at all? Where are the focus areas? What sectors are you focusing on? Where would you be buying? Where would you be looking to cut corners?
So at this point in time, I think overall market earnings growth has probably come down. The expectations have come down to 10-12%. So in that environment, I'm still, we are focused on looking at areas and sectors which are still growing. The business is steady and strong, and are somewhat less affected by the growth slowdown which has been seen in other sectors. So one of them will be gas utilities. It's a very stable business, and you have companies which are growing, be it in the gas distribution or in the LNG space. The other area is that while all the talk about credit growth, etc., continues, what is interesting is that overall housing loan growth is still quite decent, and that is being reflected in the fact that the home improvement companies, not the real estate space, which has its own issues in terms of offtake, but the home improvement companies, be it paints or ceramics, etc., they are still having a steady growth. So that would be another area. I think IT services would be another area where you are having a steady growth, and that has less of a linkage to the domestic growth variables. So those would be some of the sectors, and naturally banks. Banks are in a space where their business position within the financial sector has improved given the challenges being faced by NBFCs. So I think these are the 4 or 5 areas where I'm looking at either steady growth or something like a bank will lead the market and the economy out of the present slower growth phase. So those are the places to be in my view.
Right. So Ratnesh, would it be fair to assume that you would be focusing on banks which have a little more retail focus at this point in time, and that too frontline private sector banks?
Well, retail has been growing. Retail is steady, and so that continues as it is. But I think right now, even the corporate part of the business for the bank, the worst seems to be behind, in terms of NPA provisioning, etc. So I would not say that just to be focused on retail side of the business. Naturally, that is good, and there was positive view there that continues to remain good. But even the corporate banks, you will find that they will be able to do better than market average in terms of growth, etc. And the valuations are naturally quite low there. And that is where I think at this point in time, one needs to be positive on both sides of the banking business.
All right, Ratnesh, it was great chatting with you. Thank you so very much for accommodating our request. Appreciate you taking out the time and joining in. All right, the market's still looking okay for itself, actually, about 16 odd points higher right now. Nifty Bank is up 1/3%. So from the slump at the start of trade, it's actually managed to pick up pretty smartly. So it's doing okay at this point. We're going to take a short break, but on the other side of the break, we'll talk about RBI's new liquidity framework with Anand Narayan of SP Jain Institute of Management and Research. And as private banks gear up to participate in India's loan melas, we speak with CS Ghosh of Bandhan. We already spoke to him. And then T. Lata of Dhanlakshmi Bank.